the Honorable Philip Davis, Prime Minister and Minister of Finance, Ms. Christina Rolle, Executive Director of the Securities Commission, members of the Securities Commission, other distinguished guests, ladies and gentlemen, good morning and welcome. My name is Tammy Butler.
And my name is Samuel Campbell.
And we are delighted to be your moderators for this morning's briefing. We are pleased to have you join us for this virtual industry update on the Digital Assets and Registered Exchanges Act 2020. The Commission's development of DARE was thoughtful and deliberate, taking into consideration international best practices and standards. And this robust legislation has assisted with putting the Bahamas on the map in the digital asset space. This briefing is intended to highlight, among other things, information pertinent to the operations of digital asset businesses, and in particular, upcoming policies and guidance, including AML-CFT rules, which are currently out for consultation until April 29, 2022. To achieve a more efficient and effective regulatory framework, dialogue with the Commission and the industry is extremely important, and so it is our hope that you will take this opportunity this morning to engage with us, and we look forward to receiving your comments and questions. We are pleased to have the Prime Minister and Minister of Finance, the Honorable Philip Davis, with us this morning to officially open the briefing. And so without further ado, we welcome Prime Minister Davis as he brings his remarks.
Ladies and gentlemen, good morning. Here in the Bahamas, for many years, we have imagined ourselves into a fully technological future. There is still much further progress to be made, but happily, in certain sectors, the Bahamas is striding ahead. With its enactment in December 2020, the DARE Act positioned the Bahamas as one of a small but growing number of jurisdictions in the world with an established formal legal framework for regulating the issuance, sale, and trade of digital assets. To date, I understand that the Commission has registered 3 digital asset businesses under the DARE Act and is currently processing another 10 applications. And interest among potential applicants remains strong. This is all extremely welcome news. In our blueprint for change, my administration committed itself to a number of policies to advance the Bahamas as a digital society. We set out a vision for a technological revolution, which we branded as eBahamas, and detailed ways in which we would support and promote innovation in the digital economy. Under an initiative called Digital 700, we highlighted ways in which we seek to introduce transformational opportunities in new industries, new markets, new jobs, and new services. We committed to create a new agency, the Data Technology Authority, to accelerate the digitalization of existing industries in order to increase productivity, efficiency, and new revenue opportunities. We proposed further measures to speed up the digital transformation of the public sector, especially in the provision of government services. Ladies and gentlemen, the benefits of the provisions in the DARE Act sit squarely in line with these and other priorities of our administration. I hope that you will emerge from today's briefing not merely better informed, but enthused about the potential of what lies ahead in our country's national development. Thank you.
Thank you, Prime Minister Davis. Before we begin with our presentation, we would like to advise that there will be a question and answer session to conclude this morning's briefing. To ensure we get to each question as efficiently as possible, we kindly ask that you submit any questions you have during the presentation using the Zoom Q&A function and not the regular chat. Your cooperation will be greatly appreciated. Our first speaker this morning will be our Executive Director, Ms. Christina Rolle, who will be sharing some exciting updates and developments on the DARE regime. Following Ms. Rolle will be Christian Adderley, who will be speaking to updates regarding the Commission's FitLink Hub and provide an overview of the policy and innovation efforts related to DARE. And lastly, but certainly not least, will be Ms. Michelle Martin-Morrow, who will be discussing the very exciting draft, their AML CFT rules, which are currently out for public consultation. Ms. Rowell?
Thank you, Sam. The Honorable Philip Davis, QC, Prime Minister and Minister of Finance. Ladies and gentlemen, good morning. First, I wish to personally and on behalf of the Commission thank the Prime Minister, the Honorable Philip Davis, for taking the time to record the opening remarks for today's virtual briefing on digital assets and registered exchanges, or what we like to call DARE. Our support for this briefing is a clear indication of the importance of the legislation, not only to financial services, but also, and perhaps more importantly, to the Bahamas' economic recovery and to the general health and diversity of the Bahamian economy. We are always pleased for the opportunity to discuss DARE. With the promulgation of the Act in 2020, the Bahamas became one of a small but growing number of jurisdictions in the world with an established formal legal framework to regulate the issuance, sale, and trade of digital assets. With a thoughtful, internationally compliant legal framework in place, the Bahamas is now positioned to develop a well-regulated, globally leading digital assets industry for both local and international operators. This morning, I will touch on the development of the Act and delve into some key elements, including who it applies to, registration and supervision, and AML-CFT measures with respect to the Financial Action Task Force recommendations, among other things. Since mid-2018, the Securities Commission of the Bahamas has been actively engaged in the development of the Digital Assets and Registered Exchanges legislation. There were a number of factors which led us to set out on this course at that time, when the digital asset space globally was remarkably less regulated than it is now. Among them was our conclusion that digital assets would continue to grow in importance as an asset class with interest from investors and wealth managers. First, just in terms of market capitalization of cryptocurrencies specifically, which include popular tokens like Bitcoin, Ethereum, and Litecoin, growth has been substantial. From the launch of Bitcoin in 2009, the market capitalization of crypto assets had grown to $5.5 billion in 2014, and by November 2021 had climbed to a valuation of $2.6 trillion. According to cryptomarketcap.com, as at the 24th of March this year, total crypto assets capitalization stood at a little over $2 trillion. Despite the rapid rise in market cap over time, this class of assets has proven very volatile, and as can be seen in the graphic. The lion's share of the crypto assets market continues to be dominated by Bitcoin. Based on data from CoinMarketCap.com, Bitcoin accounts for about 64% of total market capitalization of crypto assets, followed by Ethereum with around 10% and Tether with around 2%. As seen in the market cap growth of crypto assets, there is a continued increase in investor demand, including institutional investors. In a Fidelity Digital Assets Institutional Investors Survey, which was published in July 2021, 1,100 institutional investors from across the US, Europe, and Asia were surveyed. According to that report, 7 in 10 institutional investors expect to buy or invest in digital assets in the future. Of those, the report indicates that over 90% expect to have an allocation in their portfolios or in their clients' portfolios within the next 5 years. In the US, the number of financial advisors surveyed who were interested in investing in digital assets increased by 20 percentage points. The study indicates that 9 in 10 investors surveyed found digital assets appealing, and the key appeal for institutions was the high potential upside. Also out of that study, 84% of US and European investors surveyed would be interested in institutional investment products that hold digital assets. The data overall presents a strong case for the continued trend of growth of investor interest in digital assets. For regulators, it underscores the need to not just be observers in this space, but to be at the forefront in the development of robust and appropriate regulation to support innovation and to foster best practices and develop international standards to protect the markets, investors, and the financial system. This reality that digital assets will only grow in significance to investors and wealth managers, and that markets and investors needed suitable legislative protection, was a driving factor that led to the development of DARE. The Commission also noted the opportunities it could create for local entrepreneurs seeking to raise capital and had received intense interest in Bahamas-based digital asset businesses from local as well as international-based persons. In addition to the potential the space represents for our financial services industry to grow, we recognize the threat represented should digital assets go unaddressed and unregulated. The Commission set out to facilitate compliant digital asset business in line with our overarching mandate to protect investors, ensure market integrity, and reduce systemic risk. The challenge was to provide sought-after legal clarity in a space that was, from a regulatory perspective, just beginning to develop globally. Fortunately, we also enjoyed high-level support for the legislation from policymakers and other stakeholders. I would like to note here that unlike many securities regulators from jurisdictions with more mature, developed capital markets, the Commission has a clear mandate to create and promote conditions that facilitate the orderly development of the capital markets. Our primary objective in developing DARE was to bring regulatory certainty to a dynamic, fast-paced, and evolving space. To develop the legislation, the Securities Commission initially conducted a benchmarking exercise of 13 select jurisdictions, honing in on regulatory approaches, global standards, and best practices in the digital or virtual asset space. We reached out to other regulators with relevant experience and consulted with industry and other stakeholders to develop the legal framework. It was extremely important for the Commission that we address the Financial Action Task Force Recommendation 15 with respect to virtual assets in order for DARE to incorporate the highest international standards with respect to anti-money laundering and countering the financing of terrorism. DARE provides key legal definitions for salient terms, including digital asset businesses, digital asset service providers, digital token, non-fungible token, utility token, and virtual currency token, among others. It intentionally does not set out to answer the question of whether a digital asset is a security or not, which I will speak to more in a moment. On a related note, you may be aware that the Central Bank of the Bahamas successfully introduced the world's first central bank digital currency. I note that digital fiat currency distributed by or approved for distribution by the Central Bank of the Bahamas is excluded and not subject to regulation under DARE. Non-fungible tokens and security tokens are also excluded or exempted from DARE. The digital assets or crypto space is still in its infancy, or in any event, far from its maturity. So it was clear to the Commission that we needed to establish a legislative framework that was not overly prescriptive. This allows us to be nimble and able to react to new risk trends or market development opportunities as the evolving landscape demands. An excellent example of this manifests with the Commission's approach to determining if a crypto or digital asset was a security or not. Through the Act, although various types of digital assets are clearly defined and we are clear about what is in scope for regulation, digital assets or cryptos are recognized as its own asset class, and by giving the space its own regulatory regime, we have removed this narrow question and its inherent uncertainty of whether crypto is security, and provided a framework whereby digital assets can be addressed holistically. Pragmatism is a key consideration in our approach to regulation, and we continue to watch as trends indicate a move towards securities and other asset classes becoming tokenized. Allow me to very briefly touch on a few elements related to who may participate under DARE. The Act requires all persons carrying on or involved in digital asset businesses operating in or from the Bahamas to be registered or licensed. This includes natural persons, companies, partnerships, trusts, and any other legal entity. Note the founders, beneficial owners, security holders, directors, and officers of digital asset businesses must be identified pursuant to the Act. DARE requires registrants to maintain professional conduct, meet all financial requirements that may be prescribed, and comply with the Act. Examples of professional conduct requirements include duties to act honestly and fairly, to have effective corporate governance arrangements in place, to refrain from improper or illegal conduct, and to have effective arrangements in place to protect client assets and money. Regarding financial requirements, after careful deliberation, and as we see how the space evolves, the Commission will prescribe these. For now, we ask that directors of digital asset businesses consider the size and risk of the business and maintain adequate capital reflective of those considerations. I wish to highlight that as a feature of DARE, financial institutions already licensed or registered with the Commission may apply for registration of the additional digital asset business service they are contemplating rather than applying for registration as a digital asset business. We anticipate this will ease the business process for current registrants and licensees. Finally, the activities of wallet service provider and custody of digital assets as licensable financial services are provided for in the Financial and Corporate Service Providers Act 2020. These, of course, represent digital asset business opportunities for local and international entrepreneurs. Regarding supervision and monitoring relative to virtual asset service providers, FATF standards set out various requirements regarding the supervisor's powers. The Act meets these, granting the Commission authority to suspend or revoke registration, enforce administrative penalties and disciplinary sanctions, and to conduct inspections and compel production of information. Regarding record keeping, FATF requires that all necessary records are kept on transactions for at least 5 years, and records on the KYC data collected through customer due diligence for at least 5 years after the end of the business relationship. The recommendations also call for virtual asset service providers to be subject to adequate regulation and supervision for AML-CFT. They must have policies and procedures around AML-CFT and compliance controls and systems. DARE meets this standard, requiring digital asset businesses to have systems in place to prevent, detect, and disclose money laundering, terrorist financing, and suspicious transactions in accordance with the prevailing AML-CFT-PF legislative suite in the Bahamas. As already mentioned, DARE was developed to take into account AML-CFT standards, in particular, the Financial Action Task Force Recommendation 15 on new technologies. The recommendation involves the identification and assessment of risk related to new products and business practices and new and developing technologies. Under the recommendation, such risk must be assessed by financial institutions prior to the launch of the product, service, technology, etc., and there must be proper management and mitigation plans and practices in place. At the country level, service providers must be regulated for AML-CFT compliance and licensed or registered in accordance with FATF recommendations. The recommendation and its extensive explanatory notes were carefully examined to ensure the Act was in compliance. Related to this, DARE requires digital asset businesses to have systems in place to prevent, detect, and disclose money laundering, terrorist financing, and suspicious transactions, and subjects them to the requirements of the Proceeds of Crime Act 2018, the Anti-Terrorism Act 2019, and the Financial Transactions Reporting Act 2018. Each of these acts was amended with the passage of DARE to include digital asset businesses as financial institutions. I just want to briefly touch on a few other AML CFT related provisions. First of all, the term beneficial owner in DARE is assigned the same meaning as in the Proceeds of Crime Act, that is, a natural person who ultimately owns or controls a customer of the natural person, or B, on whose behalf a transaction is being conducted, or who exercises control over a legal person or legal arrangement. There therefore is no discrepancy in meaning between it and this key piece of AML-CFT legislation. In keeping with international standards and best practices, DARE also provides the Commission with cooperative power for the appropriate sharing of information with both domestic and international authorities. There are a few final areas I want to touch on briefly. The first is data protection. Data protection is a vitally important element of digital assets business. DARE addresses data protection by requiring registrants to meet the provisions of the Data Protection Privacy of Information Act for customers' personal data. Also, I want to point out that the Commission publishes a register of digital asset businesses, which is accessible for viewing on the Commission's website. This is an important transparency feature which allows investors and the public to see the names and addresses of digital asset businesses registered with the Commission, the licenses or registrations held, including foreign licenses or registrations, the names of principals, directors, and other persons with management control, and any conditions imposed by the Commission. Digital asset businesses registered under DARE must comply with professional conduct requirements, including the duty to act fairly and honestly, to act with due skill, care, and diligence, to have effective arrangements in place for protection of clients' assets and money, and to have effective corporate governance arrangements consistent with guidelines issued by the Commission, amongst other things. Importantly, DARE provides the Commission with appropriate administrative authority to punish and deter misconduct, including powers to ban registrants, suspend managers, and remove directors and officers and other senior managers or general partners. In concluding, I would like to say that in developing DARE, we set out to establish the Bahamas as a leader in the crypto asset space. There is a journey still ahead of us to get us there, but we are not daunted from that objective. Managers and staff are eagerly embracing high-level capacity building opportunities with world-leading education programs such as MIT Wharton and Cambridge's Judge School of Business. We engage with the industry through the Global FinTech Network and other opportunities, and position ourselves to be on the cutting edge of regulatory developments coming out of IOSCO, the FATF, and other pertinent standard setters. Ladies and gentlemen, that brings me to the end of my presentation. I look forward to your questions during the question and answer session, and I'll be happy to engage with you then. Without further delay, however, allow me to introduce our next speaker, Mr. Christian Adley. Christian is the head of policy and research within the Office of the Executive Director. He is also responsible for SEB FitLink, which is the Commission's FinTech hub. Christian?
Thank you, Ms. Roll, for the very kind introduction. As always, I appreciate the opportunity to be with you all today. Today's industry briefing and my brief presentation here today provides the ideal opportunity for the Securities Commission in our capacity as the regulator of the Bahamas' securities and capital markets sector to update you on some of the work of the Commission with respect to digital assets. Today, I will provide some guidance on the digital asset regulatory framework adopted by the Commission, specifically our Digital Assets and Registered Exchanges Act 2020, or as you've heard, DARE, as we like to call it. And I will make a case for why we felt it necessary to regulate this exciting industry. Additionally, I will provide an overview of the Commission's research efforts and our international collaborative FinTech work that we have conducted since our last DARE industry briefing in October 2020. Finally, I will provide an update on our financial technology hub, SCB FitLink, including outlining some of the key initiatives and work of the hub in the past year. For our purposes, the digital asset sector generally comprises digital assets, or cryptocurrencies in fintech jargon, and digital asset businesses, such as digital asset token exchanges and other businesses involved in the transfer of digital assets from one account to another. Though many of these businesses have commendable objectives, the potential for manipulation, market and customer abuse remains high and presents unique challenges for even the most discerning investors. So then, why do we regulate this sector? Firstly, the underlying technologies, such as smart contracts and distributed ledgers, or DLTs, has greatly accelerated the speed at which transactions can be processed, and, most importantly, allows for the instant transmission of value, whether it be money or other digital assets, such as utility tokens or stablecoins. Together, speed and the transmission of value allows transactions to be instantaneously offered and accepted on a cross-border basis. Consequently, there are new opportunities for criminals to more efficiently perpetrate fraudulent schemes and engage in illicit activities. And after committing their illegal activities, the technology facilitates a swift and oftentimes anonymous retreat. Secondly, the digital asset sector has changed the demographics of the participants in the financial services industry. The industry is no longer homogeneous. Essentially, a computer, the right software, internet access, and a catchy slogan promising exceptionally high investment rates of return are all that is required to solicit potential investors. Now, while this financial inclusion is ideal, unfortunately, digital assets are still very risky and may suscept new participants in this sector, may not be familiar, rather, with elementary best practices of operating in a financial services environment. Absent such basic regulatory safeguards, such as disclosure of information and customer suitability, which ensures that investors participate in appropriate investment products, the potential for market and investor abuse is high. Moreover, a key component of the technology is decentralization. That is, eliminating the middleman in a transaction, such as a bank or a securities firm. While the elimination of the middleman is often cited as a positive of this new technology, the middleman does perform essential gatekeeping roles, such as price discovery and compliance functions. Regulation, then, should ensure that customers are reasonably protected and have sufficient information with which to make investment decisions. Finally, a responsible regulatory framework is vital if regulators are to mitigate the sinister effects of cyber and data crime. Though generally, digital asset businesses have made improvements in protecting customers' data and assets, major hacks still occur. Just 2 days ago, for example, Axie Infinity, a digital asset business, was exploited for over $600 million. To date, this is considered the largest hack in history. These malicious events, though decreasing in frequency, continue to show the need for appropriate regulatory frameworks that emphasize effective and robust risk management and cybersecurity policies and procedures. Hopefully, I've presented a compelling case for the need for digital asset regulation. For the remainder of my presentation, I will turn my attention to the Commission's capacity development initiatives, international fintech collaborations, and the effort of our fintech hub, SCB FitLink. Our need to further develop our capacity is based on our understanding that as fintech continues to evolve, the regulator has to be a perpetual resource of information to market participants. Constructive and open dialogue is vital. In this regard, we are committed to continually learning about fintech regulatory and technical developments. Regionally, since 2018, we have been a part of the Caribbean Group of Securities Regulators Fintech Working Group. Globally, in December of 2019, we were invited to join IOSCO's Fintech Network. And as part of our work with this network, the Commission contributed to IOSCO's Decentralized Finance Report, the first formal guidance issued by IOSCO regarding decentralized finance, DeFi, and the key issues that should be considered when regulating digital assets. The report was released in March 2022. We will continue to remain active in both organizations as memberships in these regional and international organizations ensures that the Commission is part of the global ongoing conversation about appropriate and responsible development and regulation of fintech. You may recall that the Commission launched its FinTech Hub in 2019. The Hub serves as the central point of contact for our engagement with the public on various fintech-related issues. As part of this initiative, we meet with stakeholders in the fintech sector to guide them through the Commission's regulatory requirements and to discuss regulatory developments. Additionally, the Hub serves as the Commission's fintech research arm by conducting benchmarking and analyzing upcoming or existing innovative products, and more importantly, its nexus to regulation. Since the launch of the Hub, interaction with our registrants, licensees, and other interested market participants has been robust. For the year ended December 2021, Commission staff held approximately 50 meetings with various stakeholders from a number of jurisdictions, including Hong Kong, Switzerland, the United Kingdom, and Vietnam. This slide depicts not only the number of jurisdictions that the Commission engaged with, but also the number of unique questions raised by each jurisdiction. We are especially delighted with the interaction with our Bahamian stakeholders, and we thank you, think tanks, firms, and research students, for contacting us and submitting your questions. Speaking of questions, this slide groups the questions received by the Hub according to its respective fintech category or legislation and provides the percentage of each question for each category and legislation. As expected, the most frequently asked questions concern DARE, such as categories of registration, fees, physical presence requirements, and compliance with the travel rule. Surprisingly, and to our satisfaction, questions concerning the recently adopted securities industry business capital rules, our crowdfunding legislation, were also frequently asked. We are delighted to see that this sector appears to have attracted significant interest and activity. Overall, engaging with the public via the Hub allows the Commission to keep up with industry trends and, where necessary, to cure deficiencies or address ambiguities in current legislation and to fill legislative gaps. Regarding ambiguities, for example, the Commission has clarified the application requirements for digital token exchanges that custody digital assets as an ancillary aspect of their business activities. In this instance, we were able to address a perceived loophole as identified by the industry. The engagement also helps the Commission in developing policy positions on certain digital asset-related issues, such as bespoke AML CFT rules for digital asset businesses and regulatory capital requirements. My colleague, Michelle Martinborough, our Senior Legal Counsel, whom you will hear from shortly, will address some of these issues during her presentation. Please continue to monitor our website for additional policy notes and guidance on fintech-related topics. And of course, please feel free to reach out to us at fitlink@scb.gov.bs or supervision@scb.gov.bs. Fintech continues to rapidly evolve. Excitement remains high. The potential benefits are seemingly limitless. However, the potential risks for money laundering, fraud, customer and market abuse are still high. During this critical period in the growth of the fintech industry, it is important that the regulator cultivates an environment that not only encourages innovation, but also discourages and provides appropriate enforcement measures against bad actors. We believe DARE represents an evergreen approach to our oversight of fintech. We look forward to continued collaboration during this very exciting period. Thank you so much for your attention, and now I invite Michelle to provide her updates.
Thank you, Christian. Good morning, ladies and gentlemen. It is my pleasure today to provide you with an update on the most recent legislative developments, the Digital Assets and Registered Exchanges Anti-Money Laundering and countering of financing terrorism rules. In this morning's presentation, I will provide a quick background on the reason and purpose of the rules, and then take you on a very quick walk that truly I hope will be more of a sprint through the proposed rules. Yes, I fully appreciate how hard it is to listen to a full summary of legislation section by section as the last presentation of a workshop or briefing, and believe me, I am also determined to spare myself that agony. The presenters before me have given you a complete background and status of the Commission's overall digital asset regime. As has been noted on various occasions by Ms. Roll and others, the Commission's overarching objective in developing legislation in relation to digital assets business was to be on the cutting edge of this fast developing sector and to provide opportunities for growth and development in the space. In so doing, it has also been the Commission's consistent position that its aim is to build a regime that is the right fit for the sector and will encourage growth and development in a well and robustly regulated environment. In meeting this goal, it is imperative that the regime is internationally compliant and develops the requisite standards and requirements as this sector continues to grow. Moreover, the objective must be considered in the context of the Bahamas' current international financial center status and the need for the sector to meet all requisite international requirements. Many of you will be aware that during the Bahamas' 2017 FATF review, the Bahamas was rated on various aspects of the AML-CFT regime. At that time, the standards around Recommendation 15 that dealt generally with technology and new products were devoid of specific considerations of digital assets, and Recommendation 15 was scheduled for an update. Once updated, the Bahamas was reassessed against the new standards, which required that the country should have digital asset sector-specific AML-CFT guidance. Although DARE spoke to the obligation of registrants to comply with AML-CFT standards under the FTRA, there was no guidance specific to digital asset business. In response, the Commission developed draft DARE-specific AML-CFT rules that were issued for consultation yesterday. So, what does it mean that we have DARE-specific AML-CFT rules? Currently, each of the sectors for which the Commission has regulatory oversight has AML-CFT rules specific to that sector in which they operate. Therefore, the securities industry AML-CFT rules apply to licensees under the securities and investment funds sector, while the financial and corporate service providers rules apply to licensees under the Financial and Corporate Services Providers Act. The respective rules were promulgated in 2015 and 2019, respectively. The Digital Assets and Registered Exchanges AML-CFT rules will therefore establish an AML-CFT regulatory framework applicable to registrants under DARE. The Commission anticipates that these rules will provide DARE registrants and other industry participants clear guidance on what is required for registrants to meet the regulatory obligations and international standards under the DARE AML-CFT rules. The proposed rules largely mirror the standards in the SIA and FCSP AML-CFT rules, with modifications reflecting updated international standards, as well as provisions bespoke to the digital asset space. The obligations established in the proposed rules are also parallel to the AML-CFT standards and obligations applied across the financial industry. As noted above, the objective of the DARE rules is primarily to establish a DARE AML-CFT regime that highlights, collates, and provides the meat around the more general framework of AML-CFT obligations provided in the Financial Transactions Reporting Act 2018. The key elements of the proposed DARE AML CFT rules intended to supplement the FTRA regime include the implementation of a risk rating framework, internal controls, customer due diligence requirements, record keeping, and ongoing training of staff. In our discussion today, I intend to discuss briefly these matters as they are common to each of the already existing sectors. I will highlight proposed new provisions which we hope to apply eventually to all sectors, and to note those provisions that specifically address digital asset business AML CFT risks. As is required under each of the existing AML CFT rules administered by the Commission, registrants under DARE are required to implement a risk rating framework sufficient to identify, assess, and document risks associated with the operation of its business. In the DARE AML CFT rule standards related to the requirement for a risk rating framework include new overall standards for risk assessments, as well as consideration of the risks that are likely more prevalent and specific to digital assets business. General overall standards that are new include a requirement for attention to risks related to non-face-to-face business relationships and business activities that may permit receipt of payments from unknown third parties, as well as cross-border transactions. This standard is introduced as one that was highlighted because the nature of the digital asset business. But surely these are risks that should be considered across sections and have therefore been flagged by potential amendment in the other sector rules. I am sure that those of you holding licenses in the financial sector currently include these considerations in your risk rating frameworks. The point here is that the issue is now statutorily required. Specific to digital asset business, however, is the requirement that registrants, when implementing a risk rating framework, pay particular attention to products and services involving an anonymously private or privately source, including unhosted wallets, the darknet, and blacklisted addresses. The provision, of course, would be specific to DARE AML CFT rules and not carried over to rules applicable to other sectors that currently are not inherently at risk from operations on the darknet or transactions with unhosted wallets. Again, as is the case across sectors, DARE registrants are required to implement internal control policies and procedures regarding the prevention, detection, and disclosure of identified AML CFT risks and suspicious transactions. Registrants must also appoint a money laundering reporting officer, or an MLRO, approved by the Commission and registered with the FIU as an element of their AML CFT regime under the rules. As with other AML CFT legislation administered by the Commission, the appointed MLRO is responsible for reporting suspicious transactions to the Financial Intelligence Unit and must be an individual sufficiently senior in the organizational structure to exercise the necessary authority to fulfill its duties, or a legal person approved under the FCSP-A to provide outsourced services as an MLRO. The provisions also specify the additional general standard that registrants ensure that they understand their own operating processes and procedures, regularly verify their integrity, and account for identified money laundering and terrorist and proliferation financing risks. As regards internal controls specific to digital asset business, the draft rules include a requirement that registrants document and track financial crime typologies specific to digital assets. Again, as is standard across the various legislation, customer identification verification requirements are provided for under the proposed AML CFT rules. These standards found in Part 4 of the rules reflect the standards in other AML-CFT rules. The first standard that must be acknowledged is that registrants are statutorily prohibited from entering into business relationships without applying due diligence measures, inclusive of identifying any beneficial owner. Rule 11 reads, subject to Rule 9.5, a registrant shall not enter into a business relationship or execute an occasional transaction with any person without applying customer due diligence measures to verify the identity of persons holding any beneficial owners. The rules, therefore, clearly establish an obligation on the registrant under DARE to verify the identification of the customer straight through to the level of beneficial ownership. Further, where a registrant is unable to verify the identity of a prospective customer properly, or a registrant is not satisfied of the legitimacy of a transaction for a verified customer, the registrant must determine whether to take other steps to verify the customer's identity, whether to proceed with the business relationship, whether to file an STR or suspend activity on the prospective customer's account where suspicions cannot be resolved. As to standards applicable to the conduct of due diligence, the standards require that due diligence measures use independent and reliable source documents, data, or information. Applies to registrant's risk rating framework of a customer and includes ongoing reviews and updates once a business relationship has been established with a customer. When verifying a customer, the registrant must also satisfy himself that the customer is who they claim to be, that there is sufficient information on the nature and purpose of the business relationship, including the expected volumes and pattern of transactions and activities, and that the information is independently sourced, reliable, and capable of confirming the customer's identity. Registrants must also undertake the regular verification of compliance with the policies, procedures, and controls established and implemented to address the identified risks, and must ensure that ongoing monitoring of business relationships take place on a risk basis. The ongoing monitoring includes monitoring the relationship periodically to ensure that it is consistent with the relationship's risk profile and nature of the business stated when the relationship was established. Processes should include scrutinizing the transactions throughout the course of the relationship, ensuring that source documents, data, etc. are kept up to date, and using automated systems for monitoring where there are large volumes of transactions on a regular basis, provided that flagged transactions are subject to human expert analysis to determine whether such transactions are suspicious. As regards ongoing monitoring for digital asset businesses specifically, the rules provide the processes should include analyzing blockchain and similar transactions on a risk basis, including taking into account the nature of the registrant's business and whether it is appropriate to use such analysis for all transactions. The rules establish frameworks for application of simplified, customary, or enhanced due diligence measures, depending on the customer's risk rating. As the references imply, the level of monitoring will vary depending on the category of monitoring assigned to the customer. Customary due diligence is, as it says, customary due diligence is, as it says, the level of due diligence applied to what we might consider a regular customer that presents with no particular risks, requiring that they are assigned to either simplified or enhanced due diligence. So your two pieces of identification, contact information, and source of income everyday level of due diligence is applicable. The rules provide the details of the kinds of information and data to be obtained from various categories of persons, including natural, corporate, partnership, and fiduciary relationships. When business relationships and transactions present a higher risk for money laundering or terrorist financing, enhanced due diligence measures must be applied. The categorization is, of course, largely left to registrants who must risk rate their customers based on information it receives. Having assessed that a customer is higher risk for money laundering or terrorist financing for whatever reasons, then enhanced measures must be applied. Such measures may include corroborating the identity information of the customer with third-party databases or other reliable sources, video conferencing and certification, tracing of a customer's IP address, corroborating that the activity of the customer is consistent with their transaction profile, obtaining information on source of funds or wealth, etc. In relation to digital asset business, the rules specifically provide that relationships or transactions may require enhanced due diligence, and EDD should be applied where the customer is involved in the digital asset mining of high-risk jurisdictions that involve privacy tokens or any anonymity-enhanced cryptocurrency or tokens or other anonymity-enhancing features. EDD should also be applied where a customer uses anonymous or randomly generated email address, a temporary email service. Also, where the customer appears to avoid verification or reporting thresholds through similar transactions or requests to exchange to or from cash any state-sponsored digital assets that are suspected of being used to avoid sanctions. And finally, where the customer is a politically exposed person. Transactions which may require enhanced due diligence include peer-to-peer transactions or transactions associated with anonymity-enhanced features or products and services that potentially obfuscate elements of the transaction or parties to the transactions. Transactions considered or suspected of being associated with the dark net, market abuse, ransomware, hacking, fraud, Ponzi schemes, or sanctioned digital asset addresses or accounts, or other illegal or high-risk sources, including unregulated exchanges, should also attract enhanced monitoring. Finally, transactions indicated as higher risk based on the results of the blockchain or similar analysis should also be subject to enhanced monitoring. We note that the draft DARE AML CFT rules go somewhat further than rules established in relation to other sections and include more examples of high-risk customers and transactions. On the other hand, these rules also introduce a framework for simplified due diligence. This standard recognizes that there may be circumstances where even the ordinary level of due diligence is not required, and thus a registrant may apply simplified due diligence measures. This framework requires that simplified due diligence measures are only applied in limited circumstances, and when applied, the registrant must clearly document the risk assessment undertaken to justify the use of the simplified due diligence measures. Simplified due diligence measures may include postponing the verification of the customer's identity until the risk is no longer deemed to be low or where a transaction exceeds a particular threshold set by the registrant. The introduction of express standards for the application of simplified due diligence is not present in other categories of AML CFT rules, although the standards are applied in practice. The Commission thought that providing a general framework for this area would be useful in relation to all sectors and therefore determined to include it in the DARE rules first and will likely enhance the other sector rules as appropriate. In undertaking this exercise, the Commission determined to align the definition of politically exposed persons with updated international standards and to pursue similar updates to the AML's rules applicable to the other sectors for which we are responsible. In relation to the DARE AML CFT rules, registrants are required to have policies and procedures in place to both identify and verify politically exposed persons, enhance due diligence applicable to enhanced due diligence applicable to politically exposed persons is required on the establishment of a business relationship with that PEP, as well as when continuing a relationship with the customer who has become a PEP since the establishment of the business relationship. For the purposes of the DARE rules, a politically exposed person is defined as those persons entrusted with a prominent public function, domestically, internationally, or as part of an international organization, and includes certain persons related to PEPs, persons closely associated with a PEP, and entities established by or for the benefit of PEPs. This slide really provides a summary of the categories of natural and legal persons or arrangements to which identification requirements will apply. The list is basic and does not deviate from what is already provided in the other slides. In certain circumstances, registrants are permitted to rely on customer due diligence procedures from other financial institutions. What that institution where that institution is a regulated entity subject to AML CFT obligations, or is located in a jurisdiction not listed by the international organization relative to money laundering or terrorist financing. Written confirmation that the identity of the customer has been previously verified and of the existence of the account the account or facility provided to the customer are required from the other financial institution. These standards reflect those in other sector AML rules, and there are no standards specific to digital asset businesses included. Registrants may also rely on customers' identity verification by an eligible introducer. In this case, a registrant must obtain from that introducer confirmation that the introducer has verified the customer's identity in accordance with their laws. Clear and legible copies of all documentation within 30 days of receipt of the written confirmation and certification that photocopies provided by the introducer are identical to the originals. When an eligible introducer cannot satisfy these requirements, the registrant must terminate the business relationship with the prospective customer. Again, the standards reflect those in other sector AML rules, and there are no standards specific to digital asset businesses included. Finally, please note that various categories of persons are exempted from verification requirements under the rules, including as usual, financial institutions licensed or registered by the Securities Commission of the Bahamas, the Central Bank of the Bahamas, the Insurance Commission of the Bahamas, or the Gaming Board of the Bahamas. Under DARE AML CFT rules, registrants are required to maintain records for a minimum of 7 years. I note that the list of applicable records is largely the standard list. However, it is nuanced to address the specifics of the sector and includes a requirement to maintain records relating to the identification of public keys. Other records required to maintain include, and are not limited to, records to reconstruct transactions, to satisfy court orders or inquiries from the Commission, verification of the identity records, etc. DARE registrants must also keep records of suspicions raised internally by the MLRO but not reported to relevant authorities, suspicions that the FIU, Commission of Police, and any supervisory authority have advised are of no interest, as well as the findings of inquiries conducted into unusual activities. Records may be in original or electronic media form. Finally, pursuant to Part 6 of the proposed rules, registrants must ensure that every employee and member of the senior management is aware of all internal AML-CFT policies and procedures, including those relevant to customer verification, record keeping, suspicious transaction identification and reporting, as well as AML-CFT legislative framework. We note that the DARE rules were issued for consultation yesterday and have been issued for a period of 3 weeks, with a deadline of 29th of April 2022. We welcome all comments and implore you to provide same as soon as practicable and within the allotted consultation period. Ladies and gentlemen, I thank you for your kind attention. That ends my update on the DARE AML-CFT rules and the Commission's presentation for this morning. I will now hand over to the moderators who will lead us through questions.
Thank you to all of our presenters for those illuminating updates. That concludes the presentation segment of this briefing, and we'll now open up for questions. We see that there are some questions that already came through in the chat, and Ms. Roll has started to answer and engage with our participants for this webinar. But we'd like to remind you that we have time to answer questions, and our panelists are eager and willing to engage. So please put your questions into the Q&A function of the chat. And for our first question for Ms. Roll, what's the Commission's approach as it relates to DARE over the near term?
So I think first I would want to say what the Commission's approach has been overall. First of all, I think it was important for us to provide legislative clarity in the space, regulatory clarity. We know that there's a lot of businesses that have popped up in the space in the past few years, and many of them were looking for a jurisdiction where they can operate safely and in a well-regulated environment. We thought that clarity and regulation was very, very important. That was one of the reasons we didn't take the approach of going with a sandbox solution. We didn't think that it was clearly a regulated environment or a robust environment. And so we wanted to create a framework that was, first of all, clear, but second of all, pragmatic, and then, of course, flexible. So we know that the space is constantly and rapidly evolving. So the framework that we put in place had to address the space with high regulatory standards, but at the same time, be flexible enough to adapt as the space evolves.
Okay, thank you for that. And with that being said, where do you see the DARE regime and the digital asset space generally going?
So one thing is for certain, I think for those of you who may still question, I think it's certain now that crypto assets are here to stay. I don't think that there's a debate about that anymore. Certainly the underlying technology, blockchain, is here to stay. And so we'll see more use cases of crypto assets in addition to the use cases we are already seeing. So I think immediately in the near future for DARE, we will be putting through some amendments fairly soon. Those amendments address some very minor deficiencies that we have with respect to FATF Recommendation 15. Specifically, we have to make it very clear that someone who is operating in an unlicensed way in the space, that the activity is criminal activity. So that is a minor, we consider that to be a minor amendment. But certainly we are currently reviewing developments that have taken place since DARE was enacted in 2020. Specifically, stable coins have become a very a big feature of the space, and you may notice that while DARE addresses asset tokens, I think we know enough now about stablecoin to pull that out as a type of asset token and wrap a framework around it. So we're looking at how we will address that. We're looking also at how we will address NFTs. We're also, as I said, doing some general benchmarking and some reviews with respect to the evolution in the space. So all of these amendments we expect we will address within this year, probably by the summer at the very latest.
Okay, and we have two questions kind of similar, related. The question is, will there be a plan to amend the current registration process, and particularly the documentation required? And then, I guess, added on to that, what is the minimum average time to approve or deny a license application?
So let me take the easier part of that question first, which is the minimum time. So we like to say that if an application is complete, then we can provide an approval provided that we are minded to approve it, that we can provide an approval within 30 days. That's provided it's complete. So that's a big, big caveat. What we tend to find, though, is that we have a process by which an application is sent in. We try within 5 days to let someone know if that application has any deficiencies. But there sometimes is a very protracted process back and forth between the applicant and ourselves trying to address those deficiencies. But from the point at which we have a complete application, we usually say that within 30 days. Now, in terms of the registration forms, so there are aspects of those registration forms that the Commission is addressing. I don't know specifically what the person who asked the question they're concerned about with the registration process or with the forms themselves. But if I can approach it from what I see as the general observation with respect to the forms, some of those things are minimum information that we will require on an applicant, and we won't be able to get around those. Certainly not if we want to keep up with international standards for the approval of persons operating within our jurisdictions. In terms of the ease with which those forms can be manipulated, the ease with which those forms can be submitted, I would say that you would see by the end of the second quarter, you will see some relief in those areas.
And I guess as a follow-up to that, will there also be any guidance notes or anything coming along with there?
So we do have benchmarked a few areas where I say benchmark, but we have flagged a few areas where we want to provide some guidance, particularly around the issue of regulatory capital. There are a couple issues that we will address in a frequently asked questions, and we probably will issue those frequently asked questions before the end of April.
Okay, great. Another question in the chat, will there be limitations imposed on the amount of licensees being offered in the sector?
So no, we don't have any intention to propose any limits on the number of persons, and when I say persons, I mean legal persons that we will license in this space. No, the short answer is no.
Okay. What are the present considerations surrounding the new financial requirements for licensees of DARE?
Ooh, that's a big question. I mean, I think that's a question that someone needs to come in and have a chat with the Commission. I mean, because what I get from that question that you're asking is what are the things that the Commission will consider in assessing an applicant. And I think if you look outside of the application itself and the things that the application require for submission, I would say outside of that, the biggest thing is the Commission does a very robust assessment of an applicant's fitness and propriety to operate in the space. And that includes a number of things, but I think that may be too much to get into. Yeah.
Okay. Another question, what makes the DARE legislation stand out from other regulatory regimes or in the digital asset space globally?
So, well, first of all, I don't know that there are a whole lot of other, I don't think there are a whole lot of other regimes. There are countries that address various aspects of digital assets, and they address probably certain characteristics and certain peculiarities. I would say what makes DARE different is that we provide a holistic regulatory regime for crypto assets, or if you want to call them digital assets or virtual assets. So we provide, we number one, give the regime its own space. So we don't try to put it in, or to try to make it fit into an existing regulatory framework. And that is very important because while as a regulator we can recognize that there are some aspects of crypto that have characteristics of existing spaces, it doesn't quite fit. And so it was important for the Bahamas to, one, recognize this. And incidentally, I see other jurisdictions are beginning to follow our lead on this topic, on that issue. And other thought leaders in the space are beginning to say the same thing, that when you're trying to fit crypto assets into an existing regulatory regime, you will not capture the space holistically. And so to do that, we gave it's an entirely own regime. Now, what we have done as well is we've applied principles from an existing regulatory framework. And I think that's something that DARE does, that other regimes have not done.
Okay, and I guess as a follow-up to that, has there been questions, or have you seen benchmarking by other jurisdictions done on DARE, and where they have used our legislation to kind of start to implement their own?
I mean, without naming names, I would say we do see things that are coming out there since the enactment of DARE that seem eerily similar.
Okay. Okay, another question. Has the commission been made aware of any fraudulent activity or scams relating to digital assets domestically?
So the short answer to that is not specifically related to digital assets. If Dwayne Ward, our senior enforcement manager, if he were here, he would tell you that since the pandemic, we've seen an uptick in frauds and scams on the whole within the jurisdiction. But specifically with respect to digital assets, no, we've not seen that.
Okay. Okay, another question came through, a couple questions came through in the chat. Are there any leniencies or pre-clearances given to persons currently registered with the SCB seeking registration pursuant to DARE? If so, what are they?
So yeah, there are lots of leniencies given. So for example, we don't ask someone who is already known to the commission to submit the same documentation that the commission already has on them. So for someone who's already known to the commission, yes, they have to complete an application form with respect to the registration they are currently submitting, but we don't ask them to complete to submit the same documentation that the commission already knows.
Okay, great. Another question, is the commission working with the AG's office or other similar body to establish criminal penalties?
So criminal penalties are already established in DARE. So the audience can know what the legislative process is. So the Law Reform and Review Commission, which I think they report directly to the AG's office. They review all legislation. They review all legislation before it is put before Parliament. And so the short answer is yes, we do work with the AG's office, but the regime already has criminal penalties embedded within it.
Okay, and there's two questions in the chat which are kind of similar, I guess. And you spoke to this already, but the question is, will there be any guidance given on the minimum regulatory capital requirements and confirm the percentage of capital an entity must hold?
So we think it's too soon to prescribe capital requirements. We would like to see a little bit more about how the space develops, who the operators are, how the businesses function before we start that conversation of capital, of capital requirements. At the moment, what we ask our registrants to do is to have, as a part of their corporate governance structure, that the board consider the matters of regulatory capital, considering the size of the business, the type of activities, the risks involved, and that they document these considerations and approve an appropriate level of capital for the business. And so we leave it at the moment within the corporate governance structure of the entity. But that said, there will likely come a time, maybe not this year, but certainly soon, when the commission will probably say that we've observed the space enough and we're comfortable now prescribing regulatory capital requirements for the space. And I mean, I think what the industry can expect is that once the commission does that of course will perhaps create barriers for entry in the space. I mean, someone asked a question earlier of whether the commission intends to limit the number of licensees in the space. We don't intend to limit the amount of licensees, but when we start doing things like imposing regulatory capital, things like that does create barriers for entry.
Okay, great. And I guess for Christian on this role, will there be any, I guess now, in-person events for the FitLink Hub to engage with stakeholders in the future?
I've been talking too much, I'll let Chris.
So we're happy to facilitate in-person events, either at college campuses or at the commission. Tommy Miller, incidentally, who's also here, assists me with the FinTech Hub. We are delighted and willing to meet with you via any form of medium that you desire.
Great. And I guess, Ms. Rule, any final thoughts, comments to wrap us up?
No, I mean, I think one of the things we wanted to do to accomplish with this webinar today is, you know, for those in the public who had not gotten an introduction to DARE, we certainly wanted to introduce DARE, to give an overview of it. Certainly, we want to say also that the commission is open to meet with potential applicants and registrants. The only thing you have to do is, you know, give us a call and ask for a meeting. So, but I would say that certainly it is our intention to continue to be on the cutting edge of regulation and to make the Bahamas best in class for regulation. Mm-hmm.
Great. I think I jumped the gun there. We have two more questions that came in. Three. Okay, so Mr. Rule, three more?
That's fine.
That's fine? Okay. How do you see the Commission's role in growing the industry locally for local technology platforms?
So in terms of the Commission's role locally, so we have forums such as these, you know, to educate the public. We also, as I said, will keep on the cutting edge of regulatory development. One important thing, and we didn't mention it anywhere in the webinar, and it's really for shame, is that we're currently developing an educational program that we will hope to roll out this year. So we're currently developing a series of courses. We hope to have the University of the Bahamas involved as the university that will carry these courses under their banner. And I think that you know, our intention is to use whatever resources we have to certainly develop the industry, develop the participants in it, and we see that as how we can support the industry.
Okay, great. Another question, will there be further guidance related to the requirement around the safeguarding and administration of investor assets and how platforms will demonstrate adherence to this? For example, requirements to adhere to certain control frameworks.
I think that may be a Michelle question.
I'll repeat it. So will there be further guidance related to the requirement around the safeguarding and administration of investor assets and how platforms will demonstrate adherence to this? For example, requirements to adhere to certain control frameworks.
Okay, so not to throw Michelle under the bus, but the short answer is that we think at the moment the DARE AML-CFT rules go as far as we want to go. I think that as the space evolves, we'll certainly look at whether there are other measures we need to put in place. But I think at the moment, the draft AML-CFT rules that were put out yesterday go as far as the Commission wants to go at this time.
Okay, and I think this could be for Ms. Martinborough. Can you kindly clarify the period for which records must be kept according to the DARE Act? The initial presentation mentioned 5 years, however, the last presentation referenced 7.
I'm glad you raised that question because I think the DARE Act, our understanding, what we intended to do was set the record retention period at 7 years, right, which is the period that the Commission applies throughout its legislation. So the IFA, the SIA, all of them require 5 years. I think one might require 6 years. Mm-hmm. However, the FTRA requires the 5-year period. So the proposed AML rules specifically require a 7-year record retention period. But I say that I'm glad that you raised the question so that I could go back and make sure that we don't have any conflicts within our own legislation. So I'll check the Act against the AML rules and make sure that we're online with both. But I don't think we've conflicted there. I think it is 7 years.
Okay, Thank you. And unless another question comes in the next 2 seconds, I think this is the final one. Okay, Dwayne has 2. Are there any plans to streamline DARE applications with applications for wallet providers / digital asset custody under the FCPA regime?
Okay, so that's an interesting question because one of the things that the Commission will clarify in an amendment, we recognize that an exchange in the crypto space really carries out the function. If we wanted to parallel functions in the securities space, for example, an exchange in the crypto space is carrying out the functions of an exchange as well as the functions of a broker-dealer. And so one of the clarifying amendments that we will make in DARE is to say that any wallet service, the provision of wallet services is really ancillary to the licensing of an exchange and therefore does not require an additional license under the FCSP. Now there are standalone wallet services that will be required to be licensed under the FCSP, but in as much as someone is licensed under DARE as an exchange, we see the wallet service provision as ancillary to the exchange.
Okay, and this is the final question. Who is a Bahamian resident for the DARE Act? Is this exchange control residents or persons with physical residence in the Bahamas under 2B of the DARE Act?
So I mean, I think, so let me just make it very, very clear that DARE does not have any exchange control restrictions or have any limitation with respect to a Bahamian versus a foreigner. Now, for the purpose of exchange control, I think we must know that Bahamians and Bahamian residents, and that means someone who is ordinarily resident in the Bahamas, I would imagine, but I'm not an expert on immigration or exchange control, but someone who is ordinarily resident in the Bahamas, I think that's either a permanent resident or a permanent resident with the right to work, as well as Bahamian citizens are subject to exchange control, and the exchange control regime is regulated by the Central Bank of the Bahamas.
Okay. Of course, there are more questions coming in the chat, but do we cut it now, or do we let it go? Let it go? Okay.
We have time.
So can we use AI digital verification of documents to dispense with notarized paper documents in order to provide a fully digital onboarding process?
So yes, so the short answer to that is yes. And what has happened and what the commission will probably like the licensee to do is to provide the commission with a demonstration of the systems that you will use for those verification processes. And we'd like to be satisfied that they're robust enough to meet international standards. But the short answer to that is yes. And we have approved some those systems both in the digital asset space as well as in the traditional security space.
Okay, next question. Is the SCB sufficiently satisfied that it has adequate SMEs for the ongoing effective supervision of the space?
So I would say yes. I mean, I don't know that we'll ever say that we don't, especially in the international environment that is scrutinizing the Bahamas. But I would say that we constantly review the level of resources we have, and yes, we do think we have adequate resources for the supervision of the space.
Okay. Does DARE plus the FCSP for ancillary functions also cover escrow or custody processes?
Sorry, can you repeat the question?
Does DARE plus FCSP, sorry, typed it wrong, for ancillary functions also cover escrow or custody processes?
So DARE covers custody in as much as it covers wallet service provisions as an ancillary process. I'm not aware that we have had any licensees requesting escrow services as ancillary. But if you have a scenario where an exchange would need to be holding something in escrow, then I think we would need to hear that scenario and give proper consideration to it. In terms of escrow services in the FCSP, no, escrow services are not licensed under the FCSP.
Okay, and that looks like the final question. Of course, if there are any more questions, you could feel free to reach out to the commission to get your answer satisfactorily answered. So we'd like to thank everyone for your thoughtful questions and attention. There is obviously a lot of excitement and more dialogue necessary around the space. So hopefully there will be more opportunities for engagement and discussion. I will now turn it over to Tammy to bring today's briefing to a close.
Thank you. I share your sentiment, Sam. That was a stimulating session, and we thank you all for your engagement. To note, today's presentation and the recording will be made available on the Commission's website at www.scb.gov.bs. We encourage you to like, follow, and subscribe to the Commission's social media pages on Facebook, Instagram, Twitter, and YouTube for the latest updates from the Commission and industry news. We also encourage you to reach out to us should you have any additional questions or comments. We value input from our stakeholders, and your contributions today are greatly appreciated as we continue to expand this space. We hope to have continued discourse with the industry on important topics. On behalf of the Commission, we would like to thank you all once again for taking the time to join this industry briefing. And we wish you all an enjoyable rest of the day. Thank you.